everybody, it's Morrow here. So let me bring Bryan on right now so we can chat here. Okay, Bryan,
Oh,
we're in
hey.
here. Round 3, episode 3 here.
Hello,
Um,
everybody.
yeah, definitely. Again, Morrow here, local realtor in the Greater Seattle area. Bryan Laflame here, local lender for all of Washington State here. Episode 3 of the Living in the Greater Seattle Area podcast here. We're here to talk more about what the Fed's doing and the interest rates and all that good stuff. So I'm glad one cool new thing that we're doing is we were able to hook up Instagram now. So that was that little glitch for me trying to figure out how to do that on the computer because I've got TikTok over here, I got Instagram over here, and we are multi-streaming Facebook, LinkedIn, and I've got Clapper on here, which I'm sure a lot of you are like, what is Clapper?
Can you imagine somebody from like 1992 listening to you right now?
I
Having
know.
no
They're
idea.
what?
They're like, I thought I spoke English, but what is he talking about? And
All
that's
the
just
kiddos are
1992.
all the kiddos are on Clapper. Actually, Clapper, the people on Clapper are late to the party because they're like, what? I have to stream Clapper on my phone, so
Yeah,
they're not the ones that get all the stream key on my multiple monitors set up. But
those
good to see you,
losers.
Bryan. It's near the end of the week, so yeah.
End of the week. It was a great week. It was Fed week. And the Fed helped us out big time this week,
Yeah.
which they have not done for a long time. Yes, this week was a great week. Last week was a great week. We talked last week about all the data that had come out with PMI, CPI, ABC, DEFG, unemployment, jobs numbers, all that stuff last week. And then this week we had the Fed, which was a huge idea. We had auctions, we had inflation, and we had the Fed.
Great.
Cool. It was amazing.
Yeah. Well, I think you are definitely our resident specialist that can talk more into what's going on with them and how the market's reacting. I actually have a little bit more to even share right now. I think the markets, I know on the last episode I shared how cyclically around the holiday season you can probably get the best deals in town. It's starting to pick up. There's this house in Des Moines that one of my clients wanted to nab, but they're out of town, and I kept trying to convince them, hey, let me go show this to you, virtually to see if it's even a possibility to try to get under contract. So then we could at least get the inspection going or whatnot. But they definitely weren't having it. They wanted to wait till they got back in town, which is totally fine. I set up the showing for them. For when they got back in town, had that communication with the listing agent. He said, of course, I kept checking showing time every day, and the activity started picking up right now. And on that house in particular, it went under contract the night before that I was going to show it. So that one got nabbed. We're in some areas, it's not like we're seeing yet where there's 40 offers on the table, right? But there are plenty of areas where a really good house gets listed, and within 4 days it gets a really good solid offer that seller, based on how this market's been going, is going to jump on that offer. And they're not waiting to see what other offers are going to come right now just because of how things have been over the last 9 months to a year.
Yeah, it's taken a while for sellers to understand that we've reached the bottom and are coming up from here. And so, you'll still get some jumpy sellers who will take an offer just that's an offer, which is, if you're a buyer, really good in this market. This started about 6 weeks ago, right after Halloween. November 1st is when we saw our first big drop. And for the last 4 weeks, mortgage purchase applications have increased week over week over week. So as rates have started to go down, like we talked about last week, more people are entering this market looking at buying a house, even though it is the holiday season, even though this is normally a quiet time. Like you talked about, you can find a deal in most normal years because not a lot of people are selling, not a lot of people are buying. People are mostly, hibernating for the winter, and especially around the holidays. This post pandemic world that we're in, we're still finding out what that new normal looks like. Cyclical real estate is not as cyclical as it used to be. We had existing home sales and mortgage purchase application data spike last year in January, which is incredible. We went from a seasonal 4.1 to 4.5 million homes in the beginning of the year last year, which is what was projected out based off that activity. Rates went up and stopped that, and we're ending at about 3.8 million. But people right now, as rates move down, are moving into the market. And we have heard over and over and over again, you and I both, from buyers that are on the fence saying, I'm going to wait till rates come down and then I'm going to buy. Well, that's happening. It's happening.
No, it's currently happening right now. We are in that market right now.
Yeah. Now, you're not going to wait till they're at the bottom because nobody knows what that bottom will be. But as rates come down, we're seeing activity spike up. You're seeing houses that were sitting and clients thought, hey, I can go out for the weekend. And you're saying, no, you can't now. And then it's borne out when that house eventually sells that has been sitting on the market for a while because the market is moving and shifting earlier than usual because it's so interest rate and Fed dependent. The market is so Fed dependent right now. And we can go into a ton of technicals that'll bore everybody about how you can see the difference between Fed trading and normal market trading. But the market is so Fed dependent that as rates come down, even home buyers are watching what the Fed says, watching what the bond market does, watching what interest rates do. The interest in that is at all-time highs. And now that they see it moving down, like we've been telling them, they're moving into the market. So it's about to become a really crowded market.
Yeah. No, seriously, I'm talking to a ton of buyers that they sort of sidelined themselves since I would say coming out of the beginning of 2022. When stuff started creeping up with the interest rates, they really were like, okay, I don't like where these interest rates are going. We're going to rent for a while. And a lot of them still are like, oh man, now all these rates are so high and they're starting to come back down. Aaron, how about we just keep waiting? How about we just keep waiting to ride that wave?
How's that worked out for you so far?
I know. Well, I just keep thinking back to, I think the worst time that there was that, I know it was super competitive all through the late 2020, 2021 was like a bloodbath, right? But there was, man, I am not used to swinging out of the gate so strong in a January like January 2021 was. Like, I thought some of my buyers that I was working with, I thought, no problem, this is going to be super easy. We can get you within four houses. We'll show you 4 houses. We'll get you into a house. No, like, especially on the east side, it was, I'm glad these buyers stuck it out and we pulled out all the stops, but like, it's almost like buyers were having to offer like their firstborn kid, or, like if they didn't like their fourth, some of these people having 6 children, like,
all right,
that sort of thing. Right. But
I'm trying to think about who's my fourth.
Yeah. You're like, wait, which one? Right.
I don't even know their names most days. I do have a rule for the kids. If I say your name, you're the one who's not in trouble, guaranteed. If something's happening and I dad voice and I say your name, I promise I'm not getting your name right the first time. It's just not happening. I've called kids by the dog's name before.
Oh gosh.
So
really?
Yeah.
Yeah. Awesome. Yeah. So those are kind of those are experiences that I had going through 2021. So I'm prepped for worst case scenarios. Now, of course, I'm hoping that we don't enter a market like that. But imagine that. Now we're dealing with the situation where if we have that much competition at these interest rates, at these prices now, because prices have not softened enough because of just the inventory.
Prices have gone up.
Yeah,
prices are up year over year across the board.
Prices have gone up. Now, the only thing that has sat long enough, new construction inventory softened a little bit as far as like how much they had.
Well,
right?
Yeah, and for the first time in, I don't remember exactly how long. I was reading about this the other day and researching it. New construction has dipped below resale home pricing.
Yes.
Yes. And the reason for that is inventory. People that are stuck in 3 and 3.5 and 4% mortgages that haven't wanted to move. where new construction has been the game in town, offering incentives and pushing inventory
Yep.
out as much as possible. And so you flood the market with that supply, and that supply, the pricing continues to go down, or at least it doesn't go up as quickly as resale homes because there's nothing on the market for them,
Yeah.
which was
Well, and then
insane. What a
enough of
weird market.
it is weird because enough of those current buyers saw all that inventory and what they had to offer, and they said, "I didn't want any of those choosings now." So now they're going
Yeah.
back to, okay, what is on the resale market,
Mm-hmm.
which is like nothing,
Which is nothing right now. And
Yeah.
I tell you what, a lot of people think as rates go down, people will list their house and inventory will go up. Inventory goes down in low interest rate environments. I promise you that happens, because let's look at this rationally. So if you are a seller and you are now willing to sell your house that you have a 3.5%, 4% mortgages because rates go down to 5.5% or 5%, and you got enough equity in your house that you can put enough money down to kind of, you know, offset that payment hike for the higher rate to get the house you really want, or to move to that state you really want to move to, or to downsize because whatever your reason is. Now you're gonna be moving into a higher interest rate environment. Yes, you put your house on the market, but you also take one off when you buy it. So the largest portion of home buyers is still the first-time home buyer, taking up more than a third of home buyers nationwide. And those people are millennials and Gen Zs for the most part, which is the largest generation of first-time home buyers we have ever had. And 93% of those people finance their home via a mortgage. So they're going to be doing a lot of mortgage applications. They're going to be looking to purchase homes, and they are not going to be putting homes on the market as a seller. In low interest rate environments, inventory goes down. And we talked about it a little bit earlier. The amount of people that are saying, I'm going to wait until rates go down and then I'm going to buy, you are doing what everybody else is doing. And if you're
Yeah.
doing what everybody else is doing, you are entering a crowded market with
Yep.
more scarce supply. And we
I
are
agree.
going to have a 2020, 2021 with 5.5% interest rates instead of 2.5%, 3% interest rates. That's what's going to happen. And you still have some time.
It's worse on the affordability crisis now.
Way worse. Mm-hmm.
Way worse. Because now we're dealing with harder. I mean, now we're dealing with prices that are harder to purchase, and we're also dealing with still higher interest rates than when they were at the lowest point. So therefore, the monthly payments are higher on these more expensive homes, and you're dealing with a competitive market scenario that you're going to be in.
Yeah, one of the ways
we haven't left the seller's market. It just softened enough for buyers to kind of, if buyers were savvy enough to figure out how to buy, that were willing to buy and figure out how to get through all this over the last year or so, they got a good deal because they saw long term that they were in a situation that as long as they could ride it out, no matter what, they would set themselves up for success and get into homeownership now versus continuing to rent out for.
Those people are going to benefit on the way down. The things that we have been trying to say to people of thinking long term instead of short term. Don't act out of fear, act out of rationality. Warren Buffett said it best. I think we said it on the last podcast. When people are fearful, I'm greedy. When people are greedy, I'm fearful. People have been fearful, and it would have been a great time to be greedy in this market because there were deals to pick up.
That's when all the cash investors are buying.
Mm-hmm.
They follow that philosophy.
Follow the smart money.
That's also when all the high end, or in our industry we call them luxury home sellers or luxury clients, right? The ones that
not so payment
rich people,
conscious.
People that have
Absolutely.
a lot of money, they can buy right now, so they are buying.
They're always affected less, because they have much more runway to deal with.
Right.
That's just reality. Yeah, you say we're in a seller's market. Let's see if I can share a slide on I want to show you.
Yeah, definitely. Let me. I'm gonna zoom out here so that I can let you share it.
Make sure I share the right screen. Okay, so it's going to show entire screen. That's what I want to share. There we go.
Perfect.
All right, there she is.
The stage right here.
Okay, so look at this. This is supply since this is supply over the last 40 years. If we look at supply numbers heading into the Great Recession, they headed up and then
Yeah.
way up. But we have been in 15 plus years of diminishing supply. Rates have
Right.
been going down during these 15 years until just recently when we were at record low supply numbers, like historically record. No, these vacillations right here are just seasonality of real estate. Um, so this has always been a seller's market as we continued in this downtrend of inventory um, inside this market, even as rates went up. Another thing that I want to show is the difference, and one of the biggest reasons why we have such low inventory. This shows household formations versus household completions. So new homes that are brought onto the market via new construction versus new home owners that are being brought into the market. And you can see during 2006 and 2007, during 2006 and 2007, we had the largest amount of formations and completions and the fewest amount of formations. So that was a vastly oversupplied market. Juxtapose that to the past 8, 9, 10 years, where we've had every single year but 2016, and that was just barely not. We've had more formations than we've had completions. And we're bringing that into, like I had said, the largest first-time home buying generation that we have ever seen. So,
Wow.
yes, it's still a seller's market. Yes, there's so many buyers. Yes, there's so few sellers. We just don't have enough homes to sell people. And now we're going to have more people coming into the market because of moves like this down.
Right.
Yeah. So this is what's happened in the past.
I know you're showing this last week, and it looks like it's trended down even more.
Even down from there, yeah. So we were here last week. We had a little bit of a bump up, but nothing to worry about. And then this is the Fed day right here.
Right.
So as rates came way down when Powell started speaking, and one of the major reasons that rates started to go down was we had, so the Fed has a thing called a dot plot. And a dot plot will say where they think interest rates are going into the future, the federal funds rate. And we talked about what the federal funds rate was. If you want to know what that is, go back to last week's podcast, number 2. And this dot plot I had said on my Facebook, I had said in our Facebook group, we've been trying to yell this on the mountaintops for a good 3 months. This dot plot is what sent rates up in September, right here. This when the Fed met and they have a quarterly dot plot. So that they had shown that they thought rates were going to go higher. Looks like this. So this dot plot shows where they think rates are going to go. And the reason they do it as dots is because it's anonymous for which Fed governors think rates are going to be where. And so you can see this trend upward from June to September. And then here we see this large trend downward into December and then where they think rates are going into the future. So 2 things happen. They thought rate cuts were going to happen now in 2024, where here it showed no rate cuts in 2024, and then they showed where they thought rates were going to go into the future. Now, this is notoriously volatile, and it changes really quickly. But the sentiment of the Fed, this is one of the reasons why I say the market trades on the Fed. Even though we know it's going to change into the future, the market trades on the Federal Reserve.
Right.
Big thing that happened, so that was the biggest part. The Fed said, they met and said, hey, we're not going to raise interest rates. Then they released their dot plot and they released their statement. And their statement that changed from last month's statement was that, hey, jobs aren't quite as strong as we thought they were, which is the first time that they've really admitted, hey, there's some weakness in the jobs market. And that was a big deal because then that portends a Federal Reserve shift in policy. They've said that they were okay with losing jobs in order to fix inflation. So they said, 1, looks like jobs are weakening. And then 2, Powell said, hey, we may need to reduce restriction on the economy before we hit our 2% target of inflation. Right now, he's talking about the PCE report. And right now that is a little above 3%. And it's come down pretty dramatically. And he's saying, hey, for the first time, he's saying, hey, we may need to reduce restriction of the economy before we get to 2%, which was huge.
Yeah.
The Fed was really spooked, in my opinion, when interest rates got up to 5% on the 10-year Treasury. Really, really spooked. There's a whole lot of what's called bond vigilantism, happened in the 90s with Janet Yellen too. And so as this move up to 5, which is probably unnecessary, we always should have been in the low 4 area throughout this whole time. But the bond market spoke and was kind of like enough is enough. And then you saw the Fed change their tune and rates have come down since then. And the data has supported that. That's why this time is different than last time. Last time, you remember, we talked about rates coming down to 5.99 in January, which is right here before we got some negative job data and sent it up. Purchase applications in January, the first week of January, had the largest spike week over week in history because rates had moved from 7.3 down to 5.99. What is happening right now is, one, similar, but two, sustainable, because the data is matching what the market is, where the market is wanting to move, and that is accelerating the pace of movement.
Okay, that's good.
Yeah. Does all that make sense? Sometimes I just get in the weeds and start talking and I forget that people don't do this every day.
That makes sense to me. Anyone that's currently on here on any of the platforms, hopefully that made sense to you. Comment below if it did. If it didn't, that's fine. We'll return your comments later.
If you're either of our moms, stop commenting how handsome we are. We get it, moms.
Yeah, exactly. I don't need any more pinned comments from my mother-in-law or my mom's. My mom. Your mom, my mom. Also reminder, anyone that's on our podcast, I know the last 2 episodes have been especially heavy visual aid heavy. So a quick reminder, when you're listening to our podcast and we get into this stuff where we're explaining visual aid stuff, you can easily find what we've been talking about if you want to go back and watch this as the podcast video version or the live version on my YouTube channel, which again, all of that is linked wherever you're listening to this podcast. So quick reminder, go watch it there so you can make sure to know what the heck Bryan's talking about.
I think it's a lot easier with visual aids.
Because I honestly, I think complex. So too. Because if I was listening to this too, I'd be like, "What dot plot? What?
What's he saying?
Yeah. Where's this graph? How many?
Dot plot now to 5%.
Yeah.
Also, look at how cool this Fibonacci. Yeah. Where we're supposed to look at this incredible Fibonacci thing that I drew way back, I think in June of this last year, and then we went to the very bottom of this Fibonacci sequence. Which is incredible. This is a thing just for my own analysis that I draw. And look how incredible sometimes technicals break out, where we hit the very bottom and then bounced up. This is the mortgage-backed security market. Isn't that awesome?
Yeah.
Sorry, that's just awesome to me.
So explain that.
Technicals are a great way to kind of see where a stock or a bond or an asset might go based off of historically what has happened in there. So you have moving averages, like you can see here's 20, 50, 100, and 200-day moving averages. And so 20 days move below the 50, the 100, and getting to the 200. That's very bullish. That means that this is heading down with a lot of force, because normally these moving averages hold. You can see it here. Look at how it held right on this 50-day moving average for a while. 1, 2, 3, 4, 5 tests before it got through. Why at this level? Because it's a 50-day moving average. Why? Because it is the average of it's the average of where this asset has been over the past 50 days. Those things are incredible.
No,
people much smarter than
I'm in awe every time I see you walk me through this. Bryan, one thing I'd like to ask you, being one of my go-to lending partners, you study this like every day. It's almost like you're like a scholar with this. I don't know, I'm trying to make sure this isn't a loaded question, but like how often do you think this is the primary mode that most lenders operate in, where they're actually like studying?
Almost none. Unfortunately, almost none. When we do our first time homebuyer classes, I teach homebuyers how an interest rate is made, and I have a little like a illustration to kind of walk through what makes an interest rate when you get your loan. And 90%, as they learn that, they know more than 90% of most lenders. Unfortunately, people don't. I don't know. I think I'm just fortunate that I really enjoy this stuff. When I was in lending pre-real estate crash, during the crash, and post-crash, and I really dived deep into how the market was moving and why during that time. And it's just a love that stayed with me. But no, I coach hundreds of lenders probably on what's going on in the market and why,
Right.
and a bunch of realtors. And no, you don't have to know this stuff to be a good lender. I don't know, if I'm going to go to a lender and I'm going to ask them about what my locking or floating strategy should be, or should I be buying or should I not be buying, I would want somebody that studies it and knows this stuff. The same way that you study market trends and days on market and list to sale price and
Well,
percentage of
I
home
was
buy,
gonna bring that
that
up. It
stuff.
seems like the same mode that I'm in for because there. I mean, sure, there's a lot of when agents. Doesn't get talked about a lot in my industry, but like there's a lot of agents that that's obviously it's expected of an agent that's working with a seller to do
Yeah.
CMAs, right? CMA, comparative market analysis to figure out what the home is worth, right? But not a lot of I don't know of that happening a lot in the industry on the buying side, or at least that's at least not what my experience was when I bought my home.
Yeah.
Like when I first bought my house with the with one of the realtors I was originally working with, when I asked, well, um, I know the house is ultimately what it should be worth to me, but I'd kind of like just in general, I'm
Mm-hmm.
I'm into analysis. I'd like to know just in general,
Lead me,
what
teach
is the
me, guide
market
me. Yeah.
saying it should be worth compared to what is it listed at? And then all I got back was uh,
The shruggy emoji.
he or she, I'm not going to name names,
It.
uh, printed out just a copy of 10 properties with different bedroom, bathroom count, widely different square footage, different stories, and different like miles apart, and was not honed in at all, and then didn't even tell me how to interpret the data, and was like, "Here you go." And then I'm
Oh,
like, what do I do with this? So like I think if do you ever run into that where like you
yeah.
have a home buyer that's savvy enough that might be asking a question to you but like they
Yep.
don't know if you're
There are
wording it right, but then
times, yeah.
yeah,
There are times in home buyer, we're super handholdy. We do Zooms with
right,
people all the time. We go over
right,
this market data. We one of the big things that people don't want to feel stupid. And
right.
sometimes they'll feel stupid asking a question that they feel like is basic. But the reality is, this is too big a decision, and none of this is basic. This is your first, second, third time in your life dealing with this information. Ask all the questions that you can think of, or ask the same question as many different ways as you need to until it clicks. So we
Right.
handhold a lot, we do Zooms a lot, and the reason is it's too big of a deal to not understand. And I find there's two clients. There's ones that really want to understand and know what's going on and why. And that's so fun to nerd out with them. And there's ones that
I
just
love
want to
that
know
too,
that
by the
I
way.
know. Yeah.
Yeah,
And the others just want to know that I know. And they're
yeah,
like, okay, if you know, then I can trust you. That's the kind of consumer I am. If I'm talking to somebody who's an expert in their field, I'm like, hey, I'm just going to follow your lead here. I've hired you because I trust you. I've already vetted you. I trust you. And I know you know what you're talking about. This isn't for me to know. This is for you to be an expert on. But there are some people want to know all the things, and some people just want to know that you know the things. And you got to be able to serve both of them well. But if you don't know any of the things, you can't serve either of them, and you just get this
yeah,
data thrown up on you, and it's like, here you go, see you later.
yeah.
And I think
Without it explained to you, yeah,
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 I've narrowed it down to there is such a low barrier to entry to some of the most important things that we do in
yeah,
our society:
right.
insurance, financial planning, real estate, lending. Very low barriers of entry. You got to take a test in real estate lending that's pretty difficult. It's not the easiest test in the world, but it's not the hardest. And if you study, you'll pass it.
And
And
it doesn't teach you how to be good at taking care of people. It just
no,
teaches you
not
how
at
to
all.
stay out of jail, basically.
Yep, how to stay out of jail and
Yeah,
what riparian rights are and how many
yeah,
hectares are in a furlough and like
yeah,
yeah, it's crazy. But there's such a low barrier of entry that you have to have some sort of underlying drive. Of For most of us, it's service of people. For me, it is just the incredible high that I get from somebody who didn't think they could buy a home, that I get to sit across and be like, yes, you do. You do get to buy. This is
I
for you.
agree.
This is in your
I
future.
agree.
There's nothing like that in the whole world. Helping my business partners raise their business to whatever level they want to raise it to and be able to partner with them. I love it. And then I just market
Like
data I'm recruiting
maybe
for.
this person,
Oh, hey,
or
girl. She was the
or
best.
these guys right before
Those
the
guys.
holidays, right? Yeah.
Yeah, they're coming up on a year. That's right.
Or all these people behind us,
Yeah, there's nothing like it. We get to do
Yeah.
that and we get paid for it. That's
Right.
crazy to me sometimes that I
Yeah.
get paid to do this.
Right.
I would say I would do it
Yeah.
for free, but I don't want that live or recorded forever on any podcast.
Oh,
Brian said he did.
edit it out. No, someone.
Brian's wife said no.
Yeah. Exactly. Yeah. Good.
Yeah. What do you agree with that? Do you think I'm off base at all?
No, I back that up 100%.
Mm-hmm.
I'm right there with you on that. I mean, with that said, shameless plug, I will throw this in here because I don't have any actual sponsored ads yet on any of these podcasts or anything. I don't know if we'll ever get there. But by the way, again, my name's Aaron Morrow. I'm a local realtor in the Greater Seattle area. I primarily work with clients in King, Pierce, and Snohomish counties. Every day we're getting calls, texts, and emails from people just like you looking to make their move to the Greater Seattle area or buy or sell houses in this area, which I absolutely love. Brian absolutely loves. He works with everyone all throughout Washington. So whenever you're looking to make your next move, your next purchase, or your sale, give us a call, shoot us a text, send us an email. My personal favorite is the Zoom, though, so all of our contact information is going to be found below in the comments after these lives are done, though. So that's when I'm going to be posting all of our contact information throughout everywhere where we said. Again, Facebook, LinkedIn, TikTok, Instagram, YouTube, Clapper.
There's no way you didn't make up some of those words. You made up some. There cannot be that many social medias. Oh, that sounds exhausting.
Ping pong.
No. We got ping pong. We got pivot table. We got grand finale.
Jib jam.
We got bifocal. Jib jab. Oh, do you remember Jib Jab?
Have you been on Woof? Yeah, Jib Jab. Yeah, I remember.
It's Rye from Woof.
Yeah, it's Rye from Woof. Oh man. Yeah. I wanted that. I would have invested, not to segue, but like if that was a real service, I totally would have invested in Woof and sent someone.
Yeah.
It included fax.
Fax.
You could have faxed someone too.
Fax,
at the same time.
Yeah.
Fax, phone calls, Facebook. I mean, they would have added to it. You would have been able to Instagram someone, bomb them, Loom video them at the same time.
Look what this is. This is Woof.
Yeah.
You're live on a bajillion different social medias, free and real and not real.
This is like the streaming version of Woof from that show that we can't name because
for copyright reasons. I am in the office right now. I'm in the office. That's just where
you're in the
office.
The office. I'm in my office too.
Yeah, I went to the office today. I didn't do the home office. I went to the office.
Yeah, and your buddy Ryan from the office.
From Woof.
Yeah, from Woof. Yeah.
It's Ryan from Woof.
Exactly. Yeah. Good.
Well, anything else we want to go over today, man?
No, I think that's about it for today. I think that was great. I'm glad that you that was a two-parter. I'm glad that you brought that up. Everyone, again, I think we're going to keep tracking what's going on and telling you what's going on in the market, but it is starting to pick up. I still think it's a better time if you can get in right now. My final thoughts are, if you have been on the fence and you are someone that has the ability to buy right now, like you looked into it, you are pre-approved, there's a price point that works for you, and you just weren't excited about the monthly payments, but you can afford the monthly payments right now, this is the time to get in right now. Don't wait. Now, of course, if you're someone that can't get pre-approved yet, or your circumstances are different, that's different, But if you're someone that can buy and has the opportunity to buy and you're just waiting for those interest rates to drop, I don't think that's a good strategic move for you right now. So that's my final thoughts for you.
Even if you don't use Aaron Morrow, Greater Seattle Realtor, or Bryan Laflame from the Flame Group. Right. This isn't a self-promotion. You have to use
find someone.
In our bones,
you're not
we
using
believe
us.
This.
Find someone and trust, but still get in the
market.
market.
In our core, this is what we, as
Right.
people who watch the market every day, this is what we believe.
Right.
Not, I want to sell you a house or give you a mortgage. I want you to get a house because it's going to be in your
This is
best
what we believe in, folks. The American dream.
Yeah.
We
And
want you to get into it right now.
You're at a unique time in history where talk to a lender. Just call and talk to them.
Please do. In fact, here, I'll throw this out here as a bone too. If you're on my other social media profiles, and I think even on my YouTube, if you go to my link in bio, I have a tab on my link in bio where there's a national section. So if you're out of state, there's a national lender that you can talk to just to start that conversation going, and you can talk to a national network that I've built up of a team of realtors that I know, like, and trust. You can chat with them. There is absolutely zero obligation, but I would just like you to get that ball rolling to look into homeownership. And that's the hardest part, is getting that process going, because like I've talked to Bryan, I think that biggest hurdle is people starting that conversation.
Yeah.
And I think some people they don't even I think they're afraid of because Bryan, would you agree some lenders they don't even have that conversation if the client won't even like fill out the loan application. They won't even like start talking to someone.
Yeah, some people are very transactional and some people are very relational. I think this job would be it's so stressful as it is. It would be utterly undoable if we were just transactional. If all you were a number that we're sending through, I would not want to come to work every day. I wouldn't do it, right. Especially in times that are hard. But yeah, find somebody that you jive with, find somebody that you can trust, find somebody that you know cares actually about you, and talk to them. Have a conversation. Ask them where the market's going and why. You've listened to this podcast, you may know a little bit. Think of it like this. If you came into a large sum of money, you would talk to a financial planner right away. What do I do with this money? How do I protect it? You have a chance right now in this market. We've laid out the reasons why what's going to happen is going to happen. And we've been pretty accurate on how we got here, predicting what would happen to get us here.
Yep.
You are coming into a large sum of money. Talk to somebody. You have the opportunity to talk to somebody you can trust about what to do with it and how.
Right. Exactly. Yeah, I think that's a good final thought, Bryan. So.
All right.
Everyone, thanks so much for joining us. If you're watching this back later and you'd like to reach out to us, again, all of the contact information is below. Tune in next week. Well, actually, I'm looking at our calendar. Hold on, next week. Yeah, we will do one more next week. And then Bryan and I are going to talk about the week after, because I know we got the holidays going on. Some of us celebrate Christmas, y'all. No.
I don't know who.
Yeah.
Some of us have 6 kids.
Yeah, and so, yeah, that guy.
Choice.
I've got one. Yeah. So, like, some of us on this podcast have between 1 and 6 children.
6 kids.
So,
I got to tell you, I think 1 is harder than 6. They kind of cordon off and play with each other a lot. The house is always a little bit messier than you like. There's always socks somewhere. But 1, you got to, especially the age of your 1, you got to laser focus.
I think if I were to do, like, a video walkthrough for you to show you my house, you'd be like, why is your house just as messy as mine with 6 children? And I'd be like,
because 1 is harder. You're laser focused.
I'd be like, you know what? She's super artsy, and we let that flourish, right? So let that creativity. Yep. Well, plus I'll also throw this out here. We're a family that fosters dogs. So we have 2 resident dogs, and we have usually 1 in rotation right now. So our foster dog, his name's Tango. He's the little blue heeler mix. I think he's mixed with either a Boston Terrier or like a French Bulldog.
I want pictures of that dog.
I will. Well, he's already adopted. He's already spoken for.
Why would you bring him up then?
He had 18 applications, and so like we round people coming.
Oh, he was okay. So this is a lot like the real estate market now.
Yeah.
Now
oh yeah.
Full
no,
circle.
It's definitely demand. Yeah. Anyway, so it'll be interesting. You know what? I will let you know the next one that we get.
Blue heeler.
Yeah, I didn't know you were in the market for a little cute blue heeler.
Neither did my wife, but she's finding out now.
So far, one of the best foster pups we've had. He is. I think this would have worked better if I was trying to sell him right now and he wasn't adopted yet. But But because now it's just like gloating on everyone live streaming that wants this dog that can't have him anymore, But
This is what we want to leave you with: the dog
super
you
kennel
couldn't have.
trained, super potty trained, doesn't complain, just chills, sits there, playful with the dog, playful with my kiddos, like well even dog. But he'll just leave you alone if you want him to. He's not like, he doesn't have that separation anxiety that some dogs come with that are super playful. So
all right,
yeah. Well, good.
On the note of the cute dog you can't have, that's what the taste we're leaving with you. See you later.
Yeah, that's what it's Tango. No. Okay, cool. Sounds good, Brian. Well, I will. We will all see you next week. Sounds good, everyone. See you next week.